Hello and welcome to Ipswich's Real Estate Podcast, a podcast where we help you navigate the often complex world of buying, selling and renting here in Ipswich and the surrounding areas. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. I'm joined by Steve Beach from Stanford Financial. Hello, Stephen.
Hey, Steve. How's it going?
Very good. Happy New Year to you. Happy New Year to everyone out there. Now, we're here for a very, very important reason. Interest rate day, today. Announcement has been made. What happened?
Well, so they did actually lift rates today. So unfortunately, I wish we were right. But yeah, the cash rate went from 3.6 back up to 3.85%. So not the news that we were all hoping for. Unfortunately, probably the news that we were expecting in the last couple of weeks. I have been copping a lot of grief at work because I think I've had something like 30 predictions correct, and this is the first one wrong for a long time.
Yeah, this is our first one wrong for a while. Yes.
So I guess out of that, a lot of the data has been coming through as to be expected. We're actually expecting, I guess, inflation to still be high. Just probably it was a little bit higher than first anticipated. So we have seen, I guess, inflation went from 3.6 to 3.8. And then the trimmed inflation, which is what they basically measure everything on, went from 3.3 to 3.4.
Right, so obviously for all the mums and dads at home, the people who've got to pay their mortgages, all this talk of inflation, I guess we get it, but we don't. Obviously, we know everything's expensive. I guess it's that spending, the government spending, the cost of everything in Australia here now is obviously just keeps on going up, and that's what's causing the pressure on interest rates.
And it is. So essentially what inflation is the gross domestic product. So essentially as, we talk about unemployment. So, unemployment also went down from 4.3 down to 4.1% as well. They're sort of anticipating it to be around about 4.5 to 5% is what they targeted unemployment. So if you think, I think I made a comment about a year ago or 2 years ago when we talked about what inflation means to everyday Australians. So we talk about wage growth and the cost of goods. So cost of living, essentially, if you think, go back 10 years ago, a loaf of bread was $2.50. Now you pay $5.50 for a loaf of bread. As inflation keeps going up, it pushes the cost of everything up. So, our wage has to go up to meet the cost of the rising of goods. So when we talk about supply and demand is essentially how it sort of affects. So at the moment, we've got a lot more demand than we have supply.
Yeah, look, we see that in the housing industry, obviously on a daily basis. There is definitely a massive hunger for housing, and whether that be houses, units, duplexes, those sorts of things, but there's not enough supply. And that's obviously what continues to put house prices up. Just before walking into this podcast, I just had someone from News Corp call me in relation to, we're sitting here in Brussels today, and Brussels has basically just recorded one of the highest price growths in the last quarter for units in particular, where she mentioned a figure of, over the last 12 months, it's gone up something like 250%. So, and she's saying, why is that happening? I'm saying, well, basically, people can't afford a traditional house. So the next level of affordability is units and townhouses, which were traditionally undervalued, and now they've just gone through the roof. The same as, unfortunately, everything else.
Well, it's some of the, I guess, the not the data that was talked about in the RBA, but just stuff that we sort of talk about in general terms in our office is if you look at property prices in a whole. So with the government 5% or Australian government 5% deposit scheme that they brought forward, so it's supposed to come out on the 1st of January, they released it at the 1st of October. We actually saw property prices increase in those 3 months by 3.6%, as where traditional homes outside of the property caps only rose by 2.4%. So you're almost seeing that 150% or like you just sort of said, 250% growth in that particular market. And that's just units, townhouses and duplexes versus houses, see it capital grows or exponentially go higher because the base cost is higher.
All right, so obviously the sad news is interest rates have gone up. Now, we've sat here on previous podcasts and we've speculated, down, pending, so they were going to stay on hold. Now, over the course of a couple of months, it's taken the RBA, some might say, a long time to make a decision about whether to reduce, and a lot of the time the decision's been to stay on hold. Some people might argue we get one sort of period that's out of where they want it to be, and instantly they put up the rates. So they tend to go up quicker than they ever come down. Don't you think?
Definitely. I guess what they're trying to do, as we talked about before, is stemming of inflation. So part of the question time afterwards was consistently, was there talk of raising rates higher? Was there talk of pause? Is there talk of, I guess, rate rises any more coming throughout the year? A lot of banks and economists are all forecasting, and everyone forecasts, to what it's going to happen over the coming years. But unforeseen circumstances can change that. But what she sort of alluded to, and we sort of spoke a little bit about it back in December, was they're almost at that neutrality. So what we're seeing is that the RBA is pretty happy with where the cash rate is. I don't think we're going to see much movement between sort of probably 3.35 and 3.85 is probably where that happy medium is going to be as a cash rate to keep that inflation under that 3%.
Well, I guess that's what everyone's now wondering. It almost appears that the Reserve Bank's almost trigger happy to go up, but reluctant to come down. So I guess that leads us to the next obvious question. When's the next time the Reserve Board meets?
I think it's the 17th of March.
All right, so that's, what are we? Today's the 3rd of February.
So it's about 6 weeks.
6 weeks away. Obviously, we need to make a prediction about what's going to happen in 6 weeks' time. Now, obviously, is there a possibility inflation will keep rising?
To be honest, they actually forecast that the inflation to slowly continue to increase all the way up until June, and then they're forecasting it to drop, I guess, considerably over the next. So it used to be target inflation was going to be by the middle of 2027. Now it's the end of 2028 is where they're trying to bring the band back into that 2.5. So they are still trending that inflation is going to be increasing, because even though we do a rate hike now, it's going to take 2 months, 3 months before it actually shows any cause and effect in the economy, because we're still spending money. We've already spent money in January, and these are December figures that we're looking at. So raising right now in February isn't going to change the January result.
No, you wouldn't think so. No, of course not. All right, prediction time. Are rates going to go up, down, or be on hold at the next meeting in March?
Being that they raised this time, I'm betting on they'll pause. I don't think they'll do any sort of movement until they see the cause and effect of, in particular, this rate rise.
I'm going to go with the same way, only because I think they would be reluctant to go twice in a row. I think they will need some time, hopefully, for everyone's sake out there who's paying a mortgage, which is 99.9% of us. But at the end of the day, let's hope that they do keep the rates on hold for the sake of affordability and for people's peace of mind. Obviously, this time of year, kids have just gone back to school. Everyone's had the major expense of, books and uniforms and all the rest that goes with it, new bags and, school shoes and the rest. So that's been a major expense on the back of Christmas. So I'm saying as well, I think interest rates will be on hold when the Reserve Bank meets again in March. Steve Beach, you're saying the same?
Hold, yep.
Okay, so there you have it. Here on Ipswich's Real Estate Podcast, our prediction, unfortunately, we have had a rate rise here in February 2026. We believe for the next meeting, rates will remain on hold. Obviously, all of the economic factors that impact these will be continued to be monitored very, very closely. And if you want to know what happens next month, you've got to tune in to Ipswich's Real Estate Podcast, where you get everything real estate related for Ipswich and the surrounding areas. So on that note, I'm joined by Steve Beach from Stanford Financial. Thank you so much as always, Steve. You are a wealth of knowledge and a pleasure to have on the show. So we really appreciate it. Now, for everyone at home, if you like the content, if you've got any questions, please subscribe and click the link below. We'd love to hear from you. Your feedback is very important to us. So to sign off, I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. Thanks, and we look forward to seeing you on our next episode of Ipswich's Real Estate Podcast.